Nasdaq's acquiring financial services software and technology company Adenza from private equity firm Thoma Bravo for $10.5 billion in cash and stock. Joining us with more on the deal, Nasdaq Chair and CEO Adena Friedman. How many, when we talk about how many different things at the Nasdaq, there's like 5 different areas you're in. This is the fastest growing one you've been building up, and this will immediately vault that to a much higher higher margins, faster growing.
It's an exceptional business, and it's addressing the bank's biggest problems, right? So we've been talking about anti-financial crime as a major area of opportunity for us, but it's also, we're there really partnering with the banks to solve their biggest challenges there. And now with regulatory compliance and risk management, those are the other 2 challenges that banks face on a continuous basis. And with a very, very large addressable market for us, about $16 billion. But for them, they've been increasing their spend on regulatory compliance by about $50 billion a year across the system since 2010. So our view is that we're here to help them try to do it much more effectively, efficiently, and we can bring all of our technology capabilities together now to really help the banks and partner with them to solve their biggest problems.
It adds how much. I look at some of these numbers, and I understand it. It will take organic revenue growth in the solutions business to 8 to 11 from 7 to 10. All right, that's good, but it sounds like that's only a percentage point. Adjusted EBITDA margins from 55 to 57%. But then what I noticed was for SAM, it really goes up 40%.
Yeah.
And you like that business, and it's a high margin business.
Yeah. So when we look at all of our solutions businesses, we've come up with what's the addressable market that we're addressing with our solutions, and this will increase our serviceable addressable market, that direct addressable market, by about 40%. And the business itself is growing 15%. It has 80% annualized recurring revenue, which obviously means they've got very high quality revenue, stable revenue that's growing. It also has a very nice margin profile. And all of those things combined make this an exceptional business that's really there to solve big problems for the banks and be a great partner to them.
It's like half stock and half cash, approximately.
It's in that range, yeah. I think that when we looked at it, Thoma Bravo, we actually approached Thoma Bravo to see if they would be interested in partnering with us on this deal. They are only a couple years into their investment thesis, so they're actually quite excited to become a strategic shareholder in Nasdaq. Holden Spate is going to join our board, and we're going to continue to provide them value while we provide our shareholders value as we integrate the asset.
$590 million in 2023 revenue. Is that?
That's right, and it's growing 15%.
But it's growing 15%, but that's still, what is that price to sales on $10.5 billion?
Well, when we look at it more on the EBITDA multiple, but also on what we can do with the asset.
What's the EBITDA multiple?
So it's about, well, at close, it'll be just over 30 times. But as we look at the 15% growth rate and the synergies, we're going to be able to integrate that, deliver about $80 million of net expense synergies and about $50 to $100 million of revenue synergies. And against a very, very high margin profile, they're going to bring about $300 million of cash flow into the business. And we're really, really excited about how we can then cross-sell our solutions, be more efficient in our operating model to serve our clients, and make it so that we can scale the business even further.
So they had a couple of brands, Calypso and the other one. Now, to put those together with the Nasdaq is better for Thoma Bravo in what way?
Well, I think that the fact is that they're very excited about Adenza as a standalone business, and they do have Calypso and Axiom SL are the 2 big products that make up Adenza. But when they think about how we can complement that with our anti-financial crime solutions and with our trading, clearing, risk management solutions that serves the financial markets themselves, I think we see a really good opportunity to kind of bring more capabilities to each of our clients, deepen the relationships. All of our solutions are modern and modular, so we can kind of grow as our clients' needs grow. And as you know, the regulatory landscape is changing all the time. Risk management is a very significant issue that all the banks are facing. So we actually think we're leaning into very significant trends across anti-fin crime and regulatory compliance.
Who are the big competitors of this business?
You know, they have some competitors out in the world, so they're global. And what they tend to do is they've been very, very strong in Europe and in North America, and just as we are. I think there's more competition in Asia, so they have a couple of scaled competitors. Whether it's, I think Murex is one of the examples, but they are, in our opinion, the best in breed, best in class, and they've been very good at penetrating the clientele
Did you
across the world.
have to think about whether this passes regulatory muster?
Well, all of the services that they offer are really complementary to what we do, so we're seeing it as a way.
Even with Lena Khan,
we've looked very, very closely at how we would we're going to be able to address our clients' problems, and we're really kind of continuing a horizontal capability to continue to manage more of the bank's problems as one partner. But we also see that there is definitely competition across the board, but we also don't see a lot of intersecting products. It's really complementary products, ability to cross-sell and continue to grow and expand both our anti-financial crime solutions with the banks and now our regulatory compliance and risk management solutions.